hold and push, and a lot of order blocks to come back and take. Okay, so far, the market has been very volatile, and it's not even FOMC yet. Normally, it's pretty boring before the FOMC meeting, but you can see here it's been very much chopping all over the place now. So will it continue up here? It's not my guess. I was looking here for a long. I did not catch the wick here, so I didn't take the trade here. And then obviously VWAP coming through here. So right now, looking for it to claim the VWAP and the orb and rotate back to the top of the orb. All right. I love you too. My wife is going to the shop.
Let's go.
So she's driving now. But yeah, so right now we're pretty much in a range. If we zoom out and we look here at the bigger picture, right? Because it's always important. We need to always zoom out, right? Where are we, right? Where are we? We are trying to hold this top as support. Okay, we've been doing this a couple of times where we want to see a flip here. You see the point of control here, but you can see we do have volume support in here that we are trying to hold and push, right? So far, no good. Trying to get up in here. We tap that point of control here and trying to push. We have very aggressive uptrending momentum here. So a big bullish divergence in here. And now we are trying to flip these highs as support. Okay, not yet though, not yet. So the thing is with this price action in this market, it's been very, very choppy. Okay, you can see here. So you can see how well the volume was defended this from that sweep right here. Okay, and now we are range bound. So if this, then that. So treating it as a range, you would expect chop in here and maybe a decision in either direction. Okay, in either direction. So coming into FOMC, what do we expect? We expected Darth Maul candle, right? Wrecking the bears, wrecking the bulls, both people getting smoked. Okay, so for now, I would suggest being patient. Today's typically not the best day to trade, especially if you're new to the markets. I will be attempting to trade this later. We'll see. I mean, you got to be quick. It's very volatile. It's very up, down, all around. Doesn't know where it wants to go. So we'll see if we can push here and reclaim and try to rotate to the highs here. But for now, I'm just going to wait. I'll let you guys know if I see anything else.
Oh, nice. Let me bring up my charts here. I'm going to be doing almost exactly the same. I'm not going to really be pushing into trading today. Most likely, I'm just going to be waiting and trading at night because I'm going to be doing some coin hunting. So if you want to join me for that, remember Piper Academy YouTube, I'll be at night right there. But in the meantime, I do expect out of that volatility or whatever that volatility does, I mean, I'm expecting something like this today or today in the morning. This is the 4 hours, so it's not going to be that prolonged, all right? So just saying. But I'm looking in between this top and this bottom here, the same bottom and top that we bought up last time. So where are we standing right now? So I'm expecting to have that high volatility zone and then start compressing. So something like a triangular pattern. If we have that triangular pattern, well, I believe that we might still have the chance to blow up all the way to 93K. Very, very important. Very important. That is not something that you define within the triangle. All right. If you want something that is defined within the triangle, that triangle is considered a symmetrical triangle, which is not there yet, but you trade it on the lower time frames. And you trade in between the boundaries, right? So remember, it's 50-50. So you are already gambling by 50-50, right? The goal on that triangle is not on the 50-50 chances of breakout, but it's on the boundaries themselves and the trading inside and the breakout of the trade. So stay calm. If you don't want the risk, just let today go, and maybe today at night we'll have a more defined direction. Just wait for the breakout retest, right? But in the meantime, if you want to trade the triangular pattern that might happen in here, let's wait for today and then keep track whenever we are breaking through any of those boundaries. I think it's going to be a clean and clear breakout. Something important, I still think that we might have something like this to play it out, maybe a short-lived triangular pattern, and or even something like that, bouncing off a quantum reactor, and then a continuation downwards. It's already too soon to say, so that's what I'm bringing up and pushing to the right as we go, and I keep it in the back of my head. So very important. Not because I draw these lines in here, is that I'm going to be shorting right away and just YOLOing it. No, I need to look at my oscillator. I need to look at my support and resistances and trade the day. So far, remember the short that we were holding? Well, it took us out. Look at that by the very, very, very tippy top. I really got very mad about it. But it is what it is. So they went hunting my absolute top liquidity out there and took me out of the short, which is fine. I mean, we already had taken some profits right down below where these two circles are. So, I mean, I have no complaints. Something important is that I'm going to be trying to hedge my position on these zones. You're going to be seeing me doing a lot of 3x to 10x trading. So I'm cutting down from 20x to down to 3x and 10x trading. Why is that? We are at the end of the channel. Period. We are at the end of the channel. It's not like the very, very end, and like from today we're gonna decide a position. But we're almost at the end. This is already too prolonged, this channel. And look at that, where we are. We're basically at the bottom. So thinking that we could be all the way to 96, it's plausible, but not probable still. All right. And so far, and what I'm telling you so far, because till today, till 10:32 CST time, all right, till today, the most possible scenario is shorting the thing for a bearish continuation, bearish flag, to get the very first target 78, 76, all right, somewhere around those points. Nonetheless, I'm gonna be trying to long the bottom because we're at the bottom. All right, so I'm just looking for another strip of the lows. So long the bottom and short the top. Why is that? We still have a chance that we are in something like this. All right, and I'm not here to predict the future, neither to guess what's going to happen. Therefore, I'm going to be trying to hedge myself. What does that mean? If we go up, I'm going to be longing it on the breakout, but also at the time, I'm going to be shorting it, keeping my loan open. If we go lower, I'm going to short it at the triangular breakout. All right. I'm going to short it. And then at 84K, I'm going to long it, keeping my short open. Right, I'm going to be moving my stop to entry as soon as possible, and I'm going to try to keep both of my positions open at somewhere around 3 to 10x. I'll decide at the moment what x am I going to be using. And that has to do with the amount of volatility that I got on that point. So low volatility, higher the X that I'm going to have, higher volatility, lower the leverage that I'm going to be using. All right. So just mentioning why, because if for some reason we have a strip of the lows, the spring, perfect. I'm going to be buying the bottom and then holding it till wherever it wants to go for then hedging it, right? But if for some reason this just turns around and goes to zero, I'm going to be shorting it too and cutting out the losing positions soon. So just mentioning that. Why? Because you will definitely be seeing me telling you, hey, I'm longing, then shorting, then longing, then shorting, all right? Especially at the end of this point. So heads up in there. We're going to be changing from one to another very quick, and you also need to be quick about it. So heads up on that. So as far as for today, again, not much of trading. I'm going to be looking for just breakout patterns in here. And at night, I'll be more interested on seeing what was the direction. Something that has a pretty freaking good direction, it's gold. So it's
crazy.
It's been crazy, man. Yeah, it's been freaking crazy. Something important is that we took that kamikaze trade. Remember, break of structure. What is a kamikaze? Because we have low volume, we have some divergences, and well, we long the actual candle, the top candle right there. All right. So remember, when you do a break of structure trade, you could be buying the top. And that's why we need to use a stop loss. That's why I call it a kamikaze trade. Nonetheless, it's been playing out very nicely. Seems like we have an ongoing goose head, pretty good goose head, which means little retracement, or at the very worst, a flat area, and then further move to the upside, and then a lower retracement. To predict how high would this go, there is a tool that I really like, which is either extension Fibonacci extensions, or better yet, one of my favorite ones, the predictive ranges. Let me see if I have them on in here. And for some reason, they keep shutting down on me. So not sure why. And if they're not in here, I just start them on manually. Yeah, they're not in here. So let's just go ahead over here, scroll down, look for, what is it? Oh, come on. Where are those? Predictive ranges. And I'm going to turn off the fill. So you will notice that we are basically against the course on a purple line. So let's wait for that. There it is. We are bouncing off the purple line. So there's two important things on the purple line. In purple line, it's one of the few indicators that I almost use as a standalone indicator. I usually short them if they're at the top, or long them if they are at the bottom. So, which means where we're going to be having a retracement, most likely. Another important thing is when we break the purple line, we regenerate another set of predictive ranges. And the importance of that predictive range being generated is the direction, or the immediate direction of the trend. Look at that. We break the purple and then we go find the blue, right? So you have an immediate direction. We break the purple, we go find the blue, right? It's not a rule, but it's something that we have found out that happens very, very often. That's why I'm pretty excited that we are in the purple, because if we regenerate another set, we're going to have another next direction. Another important thing that we have a loud order block all the way down here, but it's way too far away. Gold so far has had only 33% retracement, which basically aligns with the 5,187. So I'm going to be looking at that area for a reentry if we have a retracement. But so far, that's what I got. Let me read what Stock Scalping Samurai mentioned here. I hope this is a good question. Sometimes the RSI, MACD, and Pro Plus and candlesticks are all green, but if the volume is red, the price still goes down. Why is that? Does it have anything to do with my time frame? Yes, that has to do with the time frame. And because the greater the time frame, the more volume you accumulate, and the smaller the time frame, the less volume you accumulate. But volume is basically the bare bones, the backbone of the movement. Something important: when you have money flow rushing in, you might have a slight movement, right? So it's a very volatile movement, but what it holds or drops the price is the actual volume. And a way to counteract that is using your Prime Oscillator Pro Plus and looking not only the volume, but also the money flow. And that might give you a better direction on what might happen there. But yeah, that's what I got so far. Alex, are you looking at anything else?
Well, maybe we can talk a little bit about how to trade volatility whenever it's expected, right? So news data is always a tricky one, right? Whenever we look at news data, there's typically, the way I treat it, there's always typically 3 moves, right? You have 3 moves. So it can go either which way, okay? But your job, my little trick, is to identify the direction, okay? When you can identify direction, then you can take advantage of this craziness, okay? So a lot of the time, and maybe this time for FOMC, you just watch, right? Okay. So you just watch. But what happens is the price action will go one way. Okay, so price action will go one way, and it will trap traders, right? So you always want to think of liquidity, right? So news comes out, Jerome Powell speaking, price starts to go up. Your job is not to trade this. Your job is to recognize that it's going this direction. Okay? Once you've recognized this, you can imagine everybody's getting long in here. They typically come back and squeeze all these people. So price comes back, wrecks all these people. This direction is typically the direction they want to send it. It's just they want to trap liquidity as best as possible. So they'll trap liquidity here, they'll wreck everybody, and then they'll send it up. So your job as a trader is to wait for this area here, right? You recognize the move, right? So if we all of a sudden start pumping, that's the move. If we all of a sudden start dumping, that's the move. People short, right? Then you want to see the squeeze and the confirmation of reversal. Okay, this is where you want to get long or short. Short in this case, right? If it goes the opposite way, right? The squeeze, confirmation, this is where you want to get long. Okay? Otherwise, you end up being a victim of this crazy price action, right? You get a lot of noise during this time. And the best trade is no trade typically, but if you're gonna, gamble a little bit or have a little fun, whatever you consider it, your job is to be patient and pay yourselves. Okay. It's not an easy time to trade right now. You can see how choppy the market has been. Okay. So using good risk management is critical. You can see how they trap people, right? All last night, they start pushing price up, right? But if you have key levels like I did here, right, and you can see 3 drives bearish divergence, you're able to short this thing, right? Now I missed this trade. Kind of upsetting. I wish I did short it, but that's all right. Now you can see it came right back down, grabbed the liquidity of the low here, right? Bounced off of this order block in here. Failing to reclaim orb, so you've retested orb twice now and failed. Dumping, right? And the big thing to recognize is how they moved here, right? I always talk to you guys about imbalance. Look how fast they moved it here. So this, in my opinion, is our target for this to come back to, right? Okay, that's the key. Is like, where's the imbalance? Where are they going to send it? And how are they going to get there, right? And if you can do that, you can make lots of money, right? Like I was thinking of longing Solana here, and I'm glad I didn't. Look at this thing. Where's the imbalance? Where does it need to go, right? So by identifying this, because we want to see constructive price action, right? This stops at enough people, right, to allow us to continue. When you get something like this doesn't stop at, we don't have enough liquidity taken to continue upwards. That's why we always want to see constructive price action like this. This is sufficient to allow price to continue onwards and upwards. When you move aggressively out like this and then flag out, sometimes you go up, but a lot of time you'll bearish divergence and you'll come right back down for that move. And that's why you get Bart Simpson patterns, right? That's why you get these guys here, right? Because they always come back. So if you can recognize, okay, we want to come back here, at least to his ears, right? You always look for his ears, right? Always look for the ears to come back to, minimum. And then try to go, right? And that's how I would treat it, right? That's how I would treat it. Now, it doesn't mean you can't get bottoming structure here, bullish divergence continuation. It just means that, hey, right now, this does not look pretty, right? Does Bitcoin look pretty? I don't think so, right? Retest the previous lows. Still trying to higher lows here, still trying to go, but, it's a cautionary tell. A big tell is Ethereum. Look at Ethereum. Look at how far Ethereum has to drop in order to, I'd say it has to come down here, right? Retest to these highs. Ethereum is OC's favorite token, but
Let's
I would
go.
say ETH needs to come here, right? Retest to previous highs. If you want balance, right? The balance is in here. Not easy, man. Not easy. And it's not meant to be easy. Trading is hard, right? That's why a lot of people fail. However, if you can, be objective and manage risk, you can be successful. So right now, Bitcoin, trying to push back, trying to hold on, liquidity of the highs. You can go swing high to swing low here. What did we just tap? Golden pocket. Oh, we just missed it. Order block in here. Okay. This was from this morning. Great sell wall. Okay. Liquidity in the highs. You're looking here. You're looking here. Right? Can we continue? We shall see. Right? We shall see. You have uptrending momentum here. Good old trend line. What's chart prime saying here? So we look, where's our liquidity? I would say here, order block here, golden pocket here. So I'm looking for shorts here, right? I'm looking for shorts in here. And hopefully we can grab some good trades, right? Like if we get enough reaction in here, I'm short down into the imbalance, right? That's a nice short if we can get it. Okay, nice push back, coming back right now. So we'll see. So this is how you plan, right? If you're feeling like you need to be in a trade, your job is to be patient, right? So if you can go through your charts, use your indicators, right? Plan out the key areas of where you're looking to take trades, how you're looking to trade them, right? And by doing that, you stop yourself from trading, which is the key. It's less trades, higher probability trades over and over again, right? If you can be objective and say, hey, this has been look at the price action guys lately. This is shit. This is shit. This is not nice. Okay? If you're a swing trader in here, you're getting wrecked. You're just back. Voop, 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 right? This is very, very nasty price action. It's not easy trading right now. So what do you do in an environment like this? You don't trade as much. You be patient, right? I mean, I had a horrible trading week over here, horrible, right? I've recovered a little bit here, but it's still not easy. So be objective, be patient, use your tools, don't overtrade, enjoy the FOMC, go and apply that idea. Watch the price action today. And also, a little trick is watch when he coughs. When Jerome Powell coughs, it's like a signal. You'll see. When you see it, you'll see what I mean. Magic.
Oh, nice. Absolutely. I have another little tip in here for you guys. This is a free indicator from Chart Prime. Let me actually bring it up. So it's a volume profile bar magnifier. It works great. So I'm just going to right click here and do about, where is the about thing? Or maybe here, about this script. And I'm going to copy this for you guys. So, and finally, I'm going to paste it for you guys to add if you guys want it. All right. So this is a pretty nice, big order block scenario. I usually call this impossible targets. And it's a very important, this is actually the key, my key indicator for falling knife strategies. Very important. Not because you have that in place means that you're going to nail every falling knife, right? In fact, most likely you're gonna get caught. All right. So exactly. Yes. So just use the same thing that Alex was mentioning, right? So where's the liquidity to go to, right? And then you select the order block that is closer to that area. For example, this one in here. And right now I want you guys to pay attention that I have migrated from the 4 hours to the 5 minutes. All right. So something interesting is that to the top, we have a long way to go. And to the bottom, we have 2 areas to go. So most likely we're going to go lower to find some support, and less likely, but not impossible, we might be going to hunt some liquidity up there. All right. So just want to give you guys the heads up on this tool. Other than that, I think that would be it for today. Uh, Guys, be prepared. If you haven't prepared, go check out first your wallet, see how much money you're going to be trading if you are going to be trading. If not, you're fine. Prepare your scenario. Right? How do you prepare your scenario? Just like we are having right now. You go to the chart that you're going to be trading. You find a time frame that you want to be trading, even if you're not, right? And then you set up your indicators and watch them play out and take notes if you are not going to be trading. If you are going to be trading, you set up on one screen this, or you divide your screen in two. One, you have your broker, everything played out and set on motion. Remember, right click on the price action that you want to copy, and then you just paste it, right click, paste it on the amount size. Remember, not cross isolated, and do remember to change your leverage up in there because we don't want anything too big. All right. And other than that, set a percentage. So you have in mind always a percentage, and be very, very quick at changing your mind, and most of it at taking profits. So other than that, guys, thank you so much for joining. Hopefully you guys enjoyed today's FOMC meeting. I'm definitely going to be on Hackers, but also if you're not on Hackers, go check this guy out right here on his channel. He's going to be streaming FOMC, a masterclass on trading volatility. You're going to be streaming FOMC, right? Or did I cut that?
Yeah, I'll stream it.
Perfect. And FOMC meeting starts at 1 to 1:30 today CST. So we still have some time to go. Keep track on what's going on. Be safe and have a fantastic rest of your day, guys. Other than that, see you guys tomorrow.